Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I would like to look at our W3 or Wave 3 trade setup with a good example that unfolded yesterday on the ES. But as usual, we have to start with our risk disclaimer. Just remind you that all examples in these videos should be considered as hypothetical. No trades were actually taken. They're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. No matter what trading approach you take, there always will be losing trades, and it's important to understand and accept that. Right, let's have a look at the ES from yesterday. In today's video I'll be using our MTPredictor add-ons for NinjaTrader 8. Right, for you guys who've been following MTPredictor for a while, will know that we teach that the markets are basically random for about half the time, that's 50% of the time, and then for slightly more than 50% of the time, they're basically in a clear pattern. In other words, a pattern where you can do analysis. So how do we decide when the market is coming out of a random phase and into a clearer phase? Well, for this we go to a higher time frame chart. So on the ES, I just want to go out to the 15-minute chart here. This is the 15-minute chart, and show you how we do this. We basically put our DPs, these are our decision point levels, on the chart. Now they're on the chart in advance. You can see here I've scrolled back. In fact, that was just before yesterday even started, even before yesterday even opened. So what you would have done is gone back to the previous major low. There's the swing pivot low. Right mouse click, do decision point, and that will then place a decision point on your chart. There it is on the chart. But can you see how it's on the chart in advance before the market even gets there? It's a leading indicator. So what do we do now? Well, as time goes on, you can see that the market came down. In fact, if I do it about there, you can see that it made a low basically at our projected support zone. When that happens, we deem that the market is then coming into a clearer pattern. So we then go down to our shorter time frame. If you had the market analyzer running, you'd have seen on your 2-minute chart. If I go across, I'll just take that. There's the 15-minute support zone. You can see how it nailed the low absolutely perfectly. So I'll just take that across a bit. Now I want to go back out here, and you can see this is what happened. We had a TS1, W3 or Wave 3 trade setup. So what is this? Basically, this is where the market made the initial correction after the initial rally, in this case, off an important low. The important low is deemed important because it's making a reversal off our higher time frame support zone. Our MTP trend here, you can see, went blue to also confirm that the MTP trend, or the large degree market trend, was going up as well. So what does this mean? It basically means that the pattern is now clear and the large degree trend looks to be up, so you can now look to take long trades. So let's hover over the blue buy bar, which is this one here, right mouse click, do analysis, and this will place the analysis on the chart. Just give it a second, and there it is. Now why this is special is because if this is a wave 2, we're then looking to trade the wave 3. Why do we like the wave 3? Because it's typically the strongest and longest in a completed 5-wave sequence. So at the initial target here, this would have only been a 2.1 profit, or a profit of approximately twice the initial risk. So for users who are a bit more experienced, would you really want to come out at this initial target here? Well, not really, because this is a really short time frame chart. So let's go back out to the 15-minute chart, and let's see where the next higher time frame resistance area would be projected to be. So as the market, you can see, is starting to rally up here, we just go back to the last swing high, which is here. We right mouse click, we do decision point, and again, can you see how that gave you an area on your chart in advance? In this case, it's a resistance because it's basically above the market. As we scroll forward, you can see that's indeed what the market did. It rallied all the way up and hit that resistance level a bit later in the day. So let's now go down to the 2-minute chart and see what difference that makes. I'll just zoom in a bit. So that was our initial target there. You can see it hit it. If I come down a bit, you can see that our higher time frame target would have been right the way up here. For you guys who are a bit more experienced, will also notice that the decline down into here was a potential 5-wave sequence. So this is confirmed by, if I right mouse click over the low here and do Elliott wave intermediate, you can see that found a 1, 2, 3, 4, 5 wave sequence down here. So what do we also know about a 5-wave sequence? Well, we know that if the market exceeds the DP from the prior wave 4 high, which was there, so once the market has gone beyond that, then it's likely to retrace the entire prior 5-wave sequence to go back to the DP from the start of the sequence, which is right the way up here. So I'll right mouse click, put that on, and you can see that's basically in the same place as our higher time frame chart. So if you're a bit more experienced, you'll have seen that our MTP trend here, can you see it was deemed as strong? In other words, it had gone through our grey strength band here, so that gave an indication that the market was strong and therefore likely to trend further. So if I go back a bit and see when it just, do you see that? When we just hitting the targets there, that had gone through our strength band. So that was giving you a hint or an indication that the market was likely to go further. So rather than looking to come out at the first target, you might well have wanted to then trail that up into the higher or the next target. So there's two logical reasons for that. First of all, that was the higher time frame or 15-minute DP resistance area, and also it was the DP from the start of the prior 5-wave sequence coming off there. So there's two reasons why that might be a logical target. So if we scroll forward, you can see that's indeed what the market did do. It went up and hit that target there, where a potential profit of approximately 6 times the initial risk was available. If I then come out, you can see that was a very, very good trade indeed, where you managed to capture the biggest part of this swing up here. So that gives you an indication of what we're looking for in our W3 or Wave 3 trade setup. It's where we're looking to come in. Whoops, I didn't mean to do that. I'll put that back on. I'll just clear everything off here. Sorry about that. I just dragged that off a bit prematurely. Put the analysis back on. So we're looking to come in on a Wave 2 correction. You get subdivided into an ABC, which is our W3 trade setup. That follows after the initial rally off an important low. That low is deemed important in the start of the sequence because it made a meaningful reversal at a higher time frame support zone. In this case, then we're looking to go up to the higher time frame DP 15-minute resistance, where a profit of approximately 6.2R was available. As the market rallied up here, also if I right mouse click, do Elliott Wave Intermediate, whoops, that shows it as an ABC. I was hoping that was going to be a 5-wave sequence, but it wasn't. So you're only looking to come out at the higher time frame DP resistance area. So as you can see, that produced a nice trade where the profit was approximately 6 or just over 6 times the initial risk required to take the trade. And that's why we like these W3 trade setups, because the profits are normally large, not just large in dollars, but large in relation to the initial risks. And that's our W3 or Wave 3 trade setup in MTPredictor. And as you can see, a great example yesterday where we came off the 15-minute DP that also nailed the low of the day for you on the ES yesterday. So a great example on the ES yesterday.